Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Hello, welcome. This is Steve Meizinger, your host of the ISE webinar series. And today, unfortunately, Rob Booker, who was scheduled to be with us talking about averting disaster in the FX market, couldn't make it because Rob has lost his voice, and Rob will be back soon. We hope that Rob is resting. We know the markets are really volatile, and Rob's been speaking, traveling all throughout the world, so we wish Rob the best. And I do want to mention one thing that if you've not heard Rob speaking about 5 or 6 months ago, go back to the ISE webinars, www.ise.com/archives, and you can listen to Rob, who I guess at this point it doesn't really help us, but Rob was extremely bullish on the U.S. dollar, and he wasn't right on his timing for a couple months, but obviously the U.S. dollar had an amazing surge, and the rest is history. So Rob is resting because he he just could not deliver the presentation. So again, this is Steve Meizinger, your host, and today I'm going to be the speaker. Just want to go through some of the closing prices today. Yuck closed at 101.26. That's the dollar yen. The Australian dollar, which has had an amazing move, has gone from around 102, 103. Today closed at 141.19. And again, the Australian dollar, the symbol there is AUX. DTX, which is the U.S. dollar against the British pound, closed 57.20. The Canadian dollar, the symbol there is CDD. That closed 110.78. The euro symbol is EUI, and again, that's the U.S. dollar in the numerator, and the euro in the denominator, and that's closed at 73.43. And lastly, the Swiss franc closed at 113.74. So the ICFX options product is a U.S. dollar-based product. So we're looking at it from the perspective of the United States dollar. Today I'll be talking about averting disaster. So I'm trying to take Rob's topic and apply it or relate it to options. So options aren't for everyone, so please go to 1-888-OPTIONS, or you can go to, actually the site's now called optionseducation.org, and you can get their characteristics and risks of standardized options. And that really goes through the most simple concepts of options to the most complex. So I'm going to go through some basic options, and then we're going to go through, and in fact, I'll show you a couple of some volatility charts. I'll show you the charts of the exchange rates, and then I'm going to show you some strategies. And then lastly, it's going to be up to you. I'm going to open it up to questions and answers, and you can ask me as many questions. So ISE, you can always go to www.ise.com/FX, and we have a weekly outlook there where you can sign up for Jason Ayers, who comes in on each week and talks about how the pairs look technically. We have Trading Central group out of Europe who actually makes trading recommendations. We have weekly webinars. So there are many, many ways to access education depending on your needs. So options, my favorite subject. It's really options they're a contract. We own something. It's the right to buy or the right to sell, if you're a buyer, the right to own the exchange rate, or in the case of the puts, the right to sell the exchange rate. So it's a choice. And think of it this way. Options are great when the market's moving in a very, very volatile fashion as the market is now, because if you're right, you can make an awful lot of money. And if you're wrong, well, you have limited risk. So in volatile markets, people turn to options just to limit their risk, because that's what options are about. Options are about the transfer of risk. So let's talk about options. Calls and puts. We have calls, which are going to benefit when the U.S. dollar moves up. So this is a dollar-based product. The U.S. dollar is a numerator in all 6 pairs that we trade. Put options will benefit when the U.S. dollar sells off. The options only exist for a certain period of time, so you have up to 10 months to go out and make your forecast. And it's going to be based on your own goals and your own risk tolerances. No one can really tell you which strategy you should use, and there isn't any one best strategy. We trade these each and every day at the International Securities Exchange. We're the largest equity option exchange in the world, and we've been trading these FX options for about 12 months, actually about 18 months, I should say. And in every trade, there's a buyer and a seller, and we have market makers that quote these each and every second. So quick summary of calls and puts. You buy a call, you have the right to own the U.S. dollar. You buy a put, you have the right to sell the U.S. dollar. If you sell a call, you have the obligation to sell the U.S. dollar, but it's not a guarantee. And if you sell a put, you have the obligation to buy the U.S. dollar, but again, it's not a guarantee. And sellers sell options to receive premiums. Buyers primarily buy options because they like the limited risk. ICFX options are based on the U.S. dollar. With that in mind, if you're bullish on the dollar, you simply buy calls, and if you're bearish, well, then you would buy puts. Options allow investors to implement their view of the marketplace with limited risk. As I mentioned previously, options allow for the transfer of risk. So you can hedge exposure to the spot market by purchasing ISEFX options. You can also trade spreads, which create unique trade-offs. You could also buy options for limited risk. So there's a lot of different ways to look at the options market. And again, I wish Rob was here, but I'm also glad that I'm able to fill in, because sometimes there's a void. We have so many really smart people in the FX market, and they've been trading the FX market for decades and decades. But you need to also understand the options market. So that's why I'm here, to fill that void, talking about options. Premium paid by the option buyer to the option seller is called that premium. Premiums are paid, and the next day, brokerages, exchanges, such as the International Securities Exchange, and the Options Clearing Corp help facilitate in that process. Premiums are multiplied by 100, so if you see a premium of let's say $2, that's a $200 premium, not including any commissions. The pricing is really determined by, theoretically, it's determined by pricing models, but in reality, it's supply and demand each and every day. But you want to understand that these models are based on probabilities. And we're getting a question, no, there isn't any guest speaker today. This is Steve Meizinger, your host. The reason being is Rob Booker got sick. He actually lost his voice. So Rob will be back shortly, but I'm talking about options and how you would use them to try to avert disaster in the market we're in today. So options are about risk and reward. Ultimately, options can be used to implement your view of whatever pair that you're thinking about. So options, you have intrinsic value and extrinsic value. And intrinsic value is essentially the value that the option has if expiration was to occur immediately. Only in-the-money options have this intrinsic value. So for calls, the ISEFX value is going to be higher. For puts, it's going to be lower. And again, the intrinsic value can never be negative. The extrinsic value is all the other premium. Best way to explain the extrinsic value is an option that let's just say if expiration was to occur immediately, if that option has no intrinsic value and it has premium, that means all the other value is going to be extrinsic value. At expiration, though, all options are going to be worth 0 or their intrinsic value. So prior to that, you have what's called that delta, because we know that deltas are going to move somewhere between 0 and 100.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.